The Ghana Individual Bondholders Forum, a group of voluntary bondholders, has urged individual bondholders to reject and refrain from complying with the mandatory deadline imposed under the Domestic Debt Exchange Program. It rather wants them to join the efforts of the forum. Now, a statement signed by Senor Hosi, the immediate past chief executive of the Chamber of Bulk Oil Distribution Companies, urged bondholders or investors in mutual funds, cash trusts, balance funds to inform their fund managers not to accept the debt exchange program. Here's more in this report.
The Ghana Individual Bondholders Forum advised the government to open a channel of communication for immediate, frank, transparent and sincere dialogue on the domestic debt exchange with a view to seeking an effective resolution to the developing impasse and the fast depleting confidence in the economy. According to the forum, the medium to long-term prospect and outlook of the domestic investment culture in Ghana is going to be affected by this domestic debt exchange initiative. It also appealed to labor unions to join them in the fight for the preservation of hard-earned savings invested by the Ghanaian public, which also includes their members. The government announced that under the Domestic Debt Exchange Program, individual bondholders are to submit a voluntary arrangement to exchange their domestic bonds for new benchmark bonds. The forum concluded that this arrangement irreversibly takes away the wealth and livelihoods of direct and indirect individual bondholders whose only crime has been to trust their government.
Well, there is more trouble for government's debt restructuring exercise as a group calling itself the Pensioners Bondholders Forum is asking government to exempt their funds from the program. According to them, government's decision to include their funds will further worsen the fragile economic conditions. They say government should exempt their funds just as it did for the pension schemes. My colleague James Ishen is there, joins me with some more details. So what more have they been saying, James? All right, so we are linking up with my colleague James Ishen, who has been covering a press conference by pensioners on the debt exchange program. Want to try one more time, James, if you can hear me. What more have they been saying about the debt exchange program and their funds, for that matter?
Right, so 5 days to the registration deadline for the debt exchange program. And already we've seen a lot of organized groups coming together to speak against the debt exchange program. Now, what we have, a new development we have now is a group calling itself the Pensioners Bondholders Forum, who are also calling on government to exempt them from the debt exchange program. I have the convener here, Dr. Edu. I mean, he is the convener. I would want to know more from him. Doc, let me understand. You want government to exempt you from this program. Now, what I want to understand now is the fact that, do you have any ultimatum? What is the way forward now?
Well, we haven't given any ultimatum. We have sent a petition to the minister Tuesday, and we copied the president. We have also sent a letter to the minister this morning requesting for a meeting from the minister. And the meeting, we are saying we know his schedule, but he should try and give us audience before the closing time for the invitation.
Now, so basically, are you just doing lobbying negotiation, or you're looking forward to, head to the court?
Well, now we want to have a discussion with the minister. What the response to our petition will determine the way forward.
Well, so discussion with the minister and all that, but one may say we have just a few days to the registration deadline. That is on the 16th of this month. And at this point, if you are not giving any ultimatum, wouldn't that affect you guys? Because speaking to your members, they seem not to be happy with the fact that you guys are just basically doing lobbying or negotiation. They want more action. What do you make of that?
Well, that is the action we have taken. If we don't meet the minister, we have decided as a forum, as a group, that we are not going to accept the invitation. So members are not going to accept that invitation because we are saying we should be exempted. And I believe the minister should give us the audience, because you owe us. And if you say you won't listen to people you owe, then I can't find what a debtor would want to do. You owe somebody. You have to pay that somebody. It is your obligation to pay. And the person you owe say, you even didn't ask the person that didn't come to the person to speak with, and he has come to you. I think the only good, what I just cannot imagine the minister refusing to, the debtor refusing to meet its creditors. I can't imagine that.
Right, so this is the convener, but let me speak to a member of the Pensioners Bondholders Forum. He is a member of the group, and he's been raising a lot of issues, but I would want to know, as a member, how would this affect his livelihood? Hello, Doc, let me understand. You're a member, yeah. You're a bondholder, and a pensioner as well. How would this affect your livelihood?
Well, we all are aware of the fact that pensions are nothing to talk about, because pensions are functions of what you earn whilst you are working. And you know the level of salaries in this country. And therefore, if you are somebody who's working and you know that there's life after retirement, you take plans and take decisions that will cushion you for the future. And so we did a lot of savings, and we were encouraged by government and by the banks to invest in bonds, because that one even gives government the leeway, 3, 4, 5 years. And we live on our bonds. Because if you have a certificate, you can even use it as a collateral for any loan from a bank in times of distress. So if the arrangement that they are throwing at us today is that we should bring our old instruments and pick new ones, that has a maturity date of 2038. While as against my maturity date, which may be 2026. And that for this whole year, you're paying nothing on my investment. How do you want me to survive? We should be mindful of the fact that even though we are retirees, we're still taking care of our kids. They've left school, there are no jobs, so they are living at home. Do we drive them away? We're paying the same bills as everybody else paying. And is it because they see us as vulnerable people, that is why they don't want to engage us? If for nothing at all, we know that they have stated expressly that they will engage their foreign creditors. So if you have plans to engage foreign creditors, to negotiate on how you're going to pay them what you owe them, what about those of us locally? So that is why Doc is saying that, look, there's a petition before them. We know that in every situation and in every negotiation process, it's a win-win situation. We are prepared to sit down with them, let them listen to us, we listen to them. Where we think we can meet them halfway, we do. Where they also think they can meet us halfway, we do. Well, at the end of the day, we don't want our members to sign onto something which would be like a certificate of death.
Doc was raising the point that it's more or less a negotiation, but we are not looking at any action being taken. I mean, as a member, I don't know, are you okay with that?
Well, we cannot jump the gun. We start with negotiations. Definitely, when negotiations collapse, there are other options. But the point is that because we have sent them a letter and we are asking them to meet us, you don't issue threats when you are asking people to meet you for a conversation. So for that one, we keep to our chest. We believe that we should all be able to reason together as a nation and see how best we can help our nation survive these critical financial challenges that confront us. Not forgetting the fact that there are retirees whose bonds and coupons must be paid to them so that they can also survive.
All right. So now there's the development here. They are basically not heading to the courts or something of that. So they are embarking on negotiations with the finance ministry to know the way forward. So that's the development we have here with the group calling itself Pensioners Bondholders Forum, or now asking government to exempt them from the debt exchange program.
The VAG holder appreciate it. Want to go back to our earlier story to do with inflation. Now we know that we ended the year at 54.1%. Joining us, economist and research lead with GCB Capital, Courage Boti, to discuss this. So Courage, I was just making the point that it shot up 3.8%. That's a slowdown in the rate of inflation. What are you reading from these latest figures from the Ghana Statistical Service?
Yeah, good afternoon to your listeners. Definitely a slowdown, but it doesn't by any means show we are out of the inflationary pressure yet. I think for the December data window, it still very much captured the depreciation pressures we saw because we are talking a period, second week in November to first week in December. That was very much a period of volatility in terms of exchange rate. I think there was to some extent also crude oil price pressures, and then which translated into higher export prices and all of that, affecting transport fares and general goods and services on the market. So the marginal slowdown in the rate of growth actually for this period is actually welcome. And with the sharp appreciation we saw in December and the relative stability of the CD beginning this year now, we should see much more slower growth in inflation, at least for the January and February print, and we could be on course for a peak in March. But the situation is quite fluid. We saw from March, April, May last year the fact that inflation, the slope was low, easing, but then thereafter the depreciation process. And then in this point in time where government's ability to push through this debt exchange program, which is a precondition for securing the board approval, seems to be hanging in the balance. It appears that if we could not achieve an IMF program as soon as possible, the agitations could re-emerge soon, and that might mean more currency pressures and record the consequences thereafter, really. So it's looking good. We could peak in March, thereabout, but then it is a fluid situation and will be driven by the market conditions at the time.
All right, that's pretty much some good news. We could peak in March, but how significantly do you think that we are going to see this decline carry on? Are we going to be at a point? Is there anywhere we can reach a single digit as it was previously, or we are asking too much?
No, single digit is achievable, but not in the next year or two. In fact, inflation could drop quite sharply if the fundamentals, I think the drivers of that inflation seem to behave well going forward. Exchange rate is a big factor, fuel price is a big factor, but of more concern is food prices, really. And you can see at this point in time that the dominant driver in the inflation is food inflation. What interventions are there to boost the supply side, at least for food on the domestic market? I mean, those things will not yield results immediately, really. And so you could say that even if those key drivers like exchange rate, like fuel prices, seem to behave properly going forward, the supply side, especially for food, needs to respond as quickly as possible. And that is why, base effect notwithstanding, you could see inflation still in the double digits in 2022 by the time we end 2022, and could only probably be approaching the single digits again maybe in 2024 or sometime in 2025. Definitely we will get there. It has to do with the sustained monetary policy stance that helps to bring back or tame the inflationary pressures. And we are looking forward to what the Bank of Ghana may be doing after we've peaked, especially now that growth is challenged and there is a need for some support for growth. We will be looking at keenly at what the Bank of Ghana will be doing in that time, because it will be key in bringing down inflation sharply to the single digit again.
All right. So finally, in a minute, if you can, what should be the strategy to maintain this decline?
Well, the strategy will be there on the government side of things. We avoid the monetization of the deficit. It was the big issue in 2022, and it is so because we couldn't raise enough revenue from taxes and all of that, and the domestic market too wasn't available to support the government in terms of development and all of that. So we've depended on the Bank of Ghana for a lot of deficit financing. That in itself is inflationary unless there is some strict sterilization, which I dare say wasn't exactly the case. And so going forward with stricter discipline under an IMF program, we should be able to cut back on our expenses, consolidate a bit more, and that can tame inflation on that side. Then we sustain interventions on the supply side to produce some of the things like your rice, your poultry, and some of the other staples that Bank of Ghana now have withdrawn forex support for, really. Those things still need to be managed, their supply on the market. How do we boost domestic supply to meet them so we avoid the exchange rate effect, really? Okay. And so those will be some of the near-term interventions that can help bring back inflation to the normal levels we are used to.
Good to see you, Courage Poti. Happy New Year once again. We'll talk sometime later.
Sure, many happy returns.
All right. In austerity, stay by plan. Remember that? Well, that is a phrase that stuck from yesterday's discussion on financial management as part of our series on financial planning, and hope you are making some notes. Well, we want to continue to build on this, what we've been learning in the last couple of days, planning finances in an austere economy. Joining me in studio, Dennis Brown, Senior Manager at Financial Advisory, Deloitte Ghana. I appreciate your time with us. Happy New Year to you. We've been talking about inflation. We talked about it just a while ago, and so that makes this conversation very important, doesn't it?
Yeah, it is very, very important. You know, in our normal everyday lives, planning is important. It is even more critical now that we are in, very difficult times.
Yeah, so what are the factors to consider in financial planning, especially during this time of the year and when you hear news like this, inflation going up 54.1%? Okay,
I think what would be top of that pack would be your financial goals. It's very important that, you set goals, and we are talking about your finances, so you set financial goals, and those goals, we advise that they are SMART goals. What it means is that you shouldn't be saying things like, I want to attain financial freedom. You must be able to define what that financial freedom means.
For example,
financial freedom maybe for me means owning 2 houses, a car, and an investment account with 1 million Ghana cedis. That is specific and is measurable. At the end of the year or at the end of the set timeline, if it's 2 years, 3 years, I'll be able to go back and see whether I've achieved it or how far off I am in achieving it. That's what a SMART goal is. Of course, in there as well, your goal must be achievable.
Okay, so dream big doesn't apply in this circumstance?
No. Dream big doesn't apply. Dreams are just left where they are. They are dreams, but you have to work towards them, and you have to take realistic steps towards achieving them. So top of the pack will be setting your goals. The other thing will be to assess your net worth and your financial situation. You also need to consider your debt management plan if you have debt that you are managing. And of course, you also need to cultivate the habit of monitoring and evaluating your plan. Don't craft a plan and put it on the shelf and go back to it at the end of the year and see, what you've done with it. Yeah.
Okay. Tell us more because I want to hear more about the do's and don'ts when it comes to making a decision about financial planning.
Of course, the do's, I would say start early. I mean, as with every planning, if your planning timescale follows the normal calendar year, then you probably should get your plan ready by end of the previous year. So if we are in 2023, we are saying by end of December 2022, your plan should be ready, and it should be ready to be enrolled fully from January 2023. Don't wait till you are a quarter already into 2023 and you are crafting a plan. You've already, lost the mile. So start early is very important. That's one of the do's. It's also very important that you consider your net worth. You can't just start planning without knowing how much you are worth and your current financial situation. Do that analysis. It's very important that you do that analysis. Other than that, whatever you are setting as a goal is just a dream. I can say by end of this year, I want to see 1 million in my investment account. But if I'm earning 10,000 and already 7,000 is going into my daily expenses, that's, a mountain to climb.
All right, so you're setting your goals, you're creating a financial plan amidst uncertainties because you don't know how the year is going to go. Yes. I make reference to the inflation of 54.1%. Well, Carrie tells us that it's going to peak in March, so we are hoping to see a decline. But let's say you draw your plan and then inflation continues to rise. You have to make some adjustments. You talk about monitoring and controlling. So how do you adjust?
Exactly. That's the first step is to ensure that when you find yourself in such a situation, perhaps the regularity with which you monitor and evaluate your plan should increase. If ordinarily you do that once every quarter, now you should be doing that every month because we are in an uncertain environment. So every month you pick the plan and check whether your expenses that you've budgeted, for instance, would still be at that level, because if prices has gone up by 20% after the first month, it means that has to change going forward. So you have to include that in there and see, how much more space it covers. What else is in that plan that you can reduce? Maybe there are ones that you can do without, and stick to more of the needs and stuff like that. So constantly revisiting your plan, monitoring how it is, reflecting the environment that was there when you plan as against now, and adjusting variables in there is very important.
Okay. Do you necessarily have to stick with a plan if things change? And at what point do you strike out something if you feel, well, I budgeted for this, but inflation has gone up. I don't think this can be achieved at this point.
Yeah, of course. I would say the less rigid your plan is, the better it is, because that then means it's a plan that responds to the changing times. Because if you set up a plan, like I said, and you put on the shelves, then you've carved it in stone. Mm-hmm. You are waiting till end of year for you to pick the plan and see how far you've gone, and everything might be off track at that point. So it's important that you don't think of your plan as something rigid that you have to stick by at all cost. I mean, steer measures if you've been paying to watch entertainment, for instance, and it's gone up significantly and it's eating up into your kids' school fees. You would have to rethink it and cancel those lines so you can maintain what you consider as a need, which is your kids' school fees, food, and other stuff. So yes, from the beginning of the year, the budget for those wants, mm-hmm. let me put it that way. Somebody will argue that entertainment is a need, but fine, you define your wants.
You got to make yourself happy.
You got to make yourself happy. So, I mean, those that you identify as wants and the budget for it from the beginning of the year, maybe by assessing 3 months down the line, you realize that, they are shooting up so much, and you've got to take a decision, to curtail them. You can live without them, so you have to try and manage that and create some space.
And this is just not for individuals, but businesses as well, right?
Yeah, for businesses as well. All
right, we've just got 1 minute, so I'm going to give you that 1 minute to speak to our audience, to give them some tips, strategies, as they're wondering right now, what am I going to do? Things are going to be more expensive from what I'm hearing. What do they do? Yeah,
I think I want to focus on individuals in particular, because I see corporates as those that have the resources to engage people like us, and other experts as well, to go through the motions and all that. So for individuals, what I want to advise, and it's also an advice to myself this year, is a New Year resolution that we should create a spreadsheet to manage our expenses daily. It's very, very important, and you should develop a daily habit of doing that. So before I sleep today, I'm going to have to look at what I've spent my money on today and note it in there. It's a very simple spreadsheet of a long list of items that I spend on and dates on top for the 31 days in January. On one sheet, I can create another sheet to capture February, and you can monitor it. Over time, you are able to analyze and carve out some trend and see that, wow, sure, I've been spending so much on Momo and bank charges. I need to revise my strategy and make my purchasing decisions.
Dennis, we'll have you back tomorrow, hopefully, to talk some more about this. Dennis Brown, Senior Manager, Financial Advisory, Deloitte Ghana. Appreciate your time with us. And that's The Marketplace. Thanks for watching, everyone. We'll be back same time tomorrow.